Jimmy right now. We had a chuckle in the commercial break, and I vowed never to try and do math live on air without pre-doing the numbers ever again. We had to go to break, but you were talking about strategies right now, and you're embarking on your third strategy at this point with the markets being so volatile.
Yeah. So number 3 is to just look at the big picture. One of the problems with investing is institutions and advisors will always ask you, how much risk do you want to take? Mm-hmm. And the problem with that question is the answer is completely subjective, right? When times are good, you're going to want to take more risk. It's easy to take more risk. But if you ask somebody now, oh, I'm not that aggressive, I don't want to take too much risk. So the benchmark's always moving. So I think what's more important is to look at your big picture and say, how much risk do you really need to take? I would suspect there's a lot of people out there that could, if their portfolio made 4% guaranteed forever, that they'd actually be okay. So then why are you mucking around trying to earn, 10%? Well, it's because, you're perceived to be more successful if you're a better investor. But take stock, look at the big picture, see what you need to earn as opposed to what you want to earn. And that might give you a better understanding of what your portfolio should look like.
And for the most part, we're doing this all for retirement. That's the whole grand scheme here, that we'll have money for that rainy day or whatever. But you have to understand as well that those things are a whole bunch of unknowns. How much money will I need in retirement? Well, there's 27 books out there on the number that you would need. How long am I going to live? Who the heck knows? What if I live to 120? What if I don't and I want to take advantage of that money right now? If people understand those unknowns, that's great, but it also makes for hard work on your behalf because people have questions for you. Well, Jim, what do I do? Well,
yeah. It's not that simple, It's and coming up with the number. I think, there's a lot of variables, there's a lot of unknowns, but we have to take control of what we can control, and those are things like, and we talked about it at the break. You can control how much debt you have. You can control your spending. You can't control what the market does, but yet we have to entrust that the system is going to work long term, and it will. It always has, and it'll continue to do so. So, and the other advice I give people is, stop worrying about trying to predict the markets and all that stuff. Worry about what you can control: your spending habits, your saving rates. How much mortgage and debt and how much you put on credit cards. Those are things that are going to put you ahead financially. So that's what you need to control.
Jim, thank you so much for being here and making us feel so much better. This guy knows what he's talking about. He retired at 38 years of age. So heck, if you need any more proof, you got to listen to this guy. We've got a website for you as well where you can find out more. wealthwebgurus.com. You can go there for a whole bunch of information as well. And I'm throwing the control room into a bit of a loop, but we've got a book for giveaway that Jim has written. It's called Guarantee Your Investments. And oh, if everyone could do that at this point. Anyway, this is a great book. And if you are the first caller through right now at 412-2790, thank you so much, Janice, for putting that up. 412-2790, first caller through. This book is yours. And I think the moral of the story, don't panic, hold if you can, and heck, there'll be another crisis tomorrow, so we just need to ride it out. Thanks for being here, Jim.
Wendy.
All right, let's go back to Bridget right now. She's at McEwen this morning.